markets could really be headed from here. We're at 19,800 right now for the Nifty, so 120 points higher. Today's definitely looking good, but let's see where things could be headed. Vikas Khemani joins us. He's founder at Carnelian Capital Advisors. Vikas, as always, thank you for being on this show and taking out the time to speak with us today. Today is an important day, of course, because of the kind of cues that we have, both from, domestic market in terms of earnings as well as the Fed later. But take us through what your outlook is for this market. Do you think that we're getting into a period where we will see consolidation for a while, considering that we've run up so hard, so fast?
I think it's very natural for any time when markets run up very fast, in step function, it should consolidate. And this is what I think is likely happening. This market also went up with very little belief by and large. And, so hence there was a sharp rally, and liquidity also has kind of stopped or consolidated for a bit. So you might see a bit consolidation, but I think earnings have been quite robust across the board. And so India's story continues, and like anything else, there will be consolidation in the market, there will be corrections. I think that journey is part of the sort of par for the course, and that's what we're seeing right now.
Vikas, would you say Q1 has largely been in line with what the street was anticipating? The trends that we were expecting, IT will be weak, banks will report good numbers, the recovery in auto will continue. It's played out to script. So in that sense, is there any new trends, any new cycles or structural tailwinds that you've observed in the last 3 months?
So, structural tailwinds don't come in 3 months. I mean, they come once in a while, and then they last for 5-10 years kind of stuff. So any cyclical recovery also is a typically 3 to 4 year journey. So I think all those things are being played out, and as you rightly said, that partly it was expected, partly the expectation, partly I think bit of a surprise is also there in some of the counters. Tata Motors results were, I think, better than expected. So there are some sections where there is better than expectation results. In some of the banks, I think results are much better than expectation. So you will see always these kind of adjustments. But directionally speaking, most of the India story hypothesis, continued earning growth hypothesis is playing out.
Vikas, hi. So absolutely no doubt about it. I mean, and you have been a bull on that longer term macro trajectory for a while now. The question is, how much is already getting priced in? I mean, no doubt some of the numbers that we've got have been quite fantastic, actually. But is there enough trigger for earnings upgrades? And if we don't get those upgrades, then what will take the market higher? Could it be sheer liquidity?
Again, it depends on the time horizon. If your question is more short term, I don't know. But I think in the long term or medium term, I think earning growth and liquidity both will take markets higher. And I continue to believe that both are on a very robust wicket. India will continue to witness 15 to 18% earning growth over next 3 to 5 years, and there will be some quarters of adjustments here and there. That will always be the case. And secondly, I think India will also witness unprecedented liquidity, both from international investors as well as the domestic investors. We had lost about $40-odd billion when the Fed was raising interest rates, like any other cycle in last 2.5 years. So part of that has come back as the interest rates have peaked out, and as they soften, you will see, that and more money coming back, in times to come. So fortunately, we have both drivers of the market, which is earnings and liquidity in place. Intermittent corrections, intermittent risk factors would come about. And that's the reason I always believe that whenever there is a correction for any tactical news flow, that should be used only to deploy money, because structural trend is very much in place.
Okay, got that. Vikas, a question on the broader market, because that, continues to power ahead. It's holding up very well. But, I mean, the other argument is that valuations have gotten very distorted, right, because of the kind of money flowing into this space. Do you think we're likely to see that rally stop, or, I'm talking about the near term, say in the next 1 to 2 months?
I don't think the valuations are distorted. So, of course, valuations are not cheap, but valuations are not expensive. Valuations are a reasonably fair range zone. There are pockets of exuberance. There are pockets of euphoria, especially in mid and small cap space. One has to be careful. But I don't think India is expensive at a market level. Even if you look at in historical context or in the context of, relative players, I think, India's interest rates are coming down. So obviously, whenever the interest rate comes down, the P's get re-rated, and which is what is happening. So just to give an idea, a 2% drop in the interest rate re-rates the P by 30-35%. Now, so then you can do your math that how much has come down and what kind of. So you will see P is getting re-rated, and especially, India is the only market when there's a growth and confidence and sustainability of growth. So whenever those markets are bound to trade, well as compared to markets where there's no growth. So, comparing with the rest of the emerging market fact and, saying that India has become expensive, in my opinion, is doing disservice to India's such story. So I don't believe in this complete narrative that India has become expensive. By saying that, I think we're dissuading investors away from investing into the markets. I think India is in a fair price zone, and, India will deliver, in my opinion, 15 to 20% kind of range earnings will deliver in that kind of range in sustainable next 3 to 5 year future.
Vikas, were you at any point of time investing in any of these agrochemical type companies? Because many of them have come out and given profit warnings, whether it's SRF, which indicated that this whole correction of high cost inventory will take some more quarters. Sharda Cropchem too is talking about weak demand, and plus how prices have been under pressure because of dumping from China. And across the board, this is played out globally and locally. Was this a space that you ever looked at?
So chemicals, agrochemicals is a part of the chemical space. So I think across the board, if you see last 1.5 years, and in 21, there was a huge euphoria in the entire chemical space. We all know that chemical specialty chemicals space. And in last, especially in last 12 months, as the inventory corrections and the prices corrections have started happening, you are seeing, most of the stocks kind of taking a knock. And I see probably that might continue for 1 or 2 quarter max. But eventually, this all settled down once the inventory correction, the price correction has taken place, base is formed. These are the structural stories. Many of those companies will continue to do well. And these are the times when one should look at, and I'm not talking in a particular about a company, but generally in general, chemicals, specialty chemical, including agrochemicals as a space, it will deliver good returns. Bad times are the times to start looking at some of the names in sector, because this is structural in nature, and those temporary dislocations are, good for investors.
Okay, got that. Vikas, before we let you go, just wanted your sense on the primary market action, because quite a few new issues have been coming up. There's also Yatharth now. That'll be next in line. What's your sense on the quality of companies that are coming to the market now? And specifically on Yatharth, I'm not too sure. I'm not sure if Carnelian, do you have a stake in Yatharth already? Any thoughts on just the nature of the business?
So whenever markets are doing well, typically, in a good market, a lot of companies start tapping the primary markets, and which is a good sign. There's no question. And every market, early stage of the market, good quality companies do access, and then quality of the company is keep on deteriorating in a euphoric market. So we typically generally participate in the early stage of the market, and secondly also of course quality of the company and management we of course pay a lot of attention to before investing into that. So it's a public knowledge that Carnelian has taken an anchor investment into the company which you mentioned, and I'll stop there. But generally speaking, I think these are the markets where you will see primary market picking up and doing well. But I will guard against, not all primary markets are good. And like we have seen in the last cycle, that in the euphoric times only when bad quality companies access market and investors lose money.
Okay. All right, Vikas, we will leave it on that note for today. Thank you very much for joining in. We look forward to more conversations in the future. Quick break right now. On the other side, we'll